in tab K of the 4012, and it's going to just be going over finishing the tax return. So once we have input all of our tax information in, tax documents received from the client, any deductions or credits that are applicable to them, as well as any other taxes, it then determines if there is a refund, which is also known as an overpayment. So in this case, a refund are payments made that exceed the amount of the tax liability. The amount of the overpayment is shown on the applicable line in the refund section of the Form 1040. Also, it could be maybe there is a balance due. Tax liability exceeds the payments made, and the amount owed appears in the amount you owe section of the Form 1040. This is the amount the taxpayer must pay to the IRS. There are some instances where maybe a tax client may not have a refund or a balance due, but still needs to file the tax return. So they're just breaking even. So for the refund or overpayment that is on the tax return, the taxpayer and or spouse could apply any of the portion of their overpayment to the following tax year. So preparing these 2020 tax returns, if there is a refund, the tax client could decide to roll that over to the 2021 tax year, which then will be reflected as an estimated tax payment. Also, the refund received all or part. They could receive all of their refund or part of their refund using a direct deposit, and that could go up to 3 accounts, be placed in up to 3 different bank accounts. Or the tax client could choose to receive all or part of their refund as a check to be mailed to them, or purchase a Series I savings bonds. Also noting at the bottom, if there is a refund, the refund can be reduced if there is state tax, child support, federal debts, or student loans that are owed. So the refund could be offset to satisfy any of these debts. If there is a balance due on the tax return, the tax client will have a few options to determine how they would like to pay or submit that payment. So the first one TaxSlayer would generate the Form 1040V, which is a payment voucher. So it would already contain the tax client, their name, their social or ITIN, and the amount due. And so with that, they would then write a check or money order to the U.S. Treasury. We also like to remind our clients to make sure that the taxpayer's social or ITIN number is listed on that check or money order. Should the 1040V and the check or money order not come in together or get separated during processing time. Also, an option for the balance due is the electronic funds withdrawal. So within our TaxSlayer system, it will allow us to put the tax client's bank routing and account information should they desire. And so the IRS would withdraw the funds out of that account. And so if we were preparing tax returns starting in the month of January or February, a tax client could choose up to April 15th for those electronic funds to be withdrawn. We would still submit the tax return after we complete it, but the IRS would not withdraw those funds out of the account until April 15th. So there are optional dates that the tax client could choose up till April 15th. Also, to pay for the balance due, the tax client could choose to pay with a credit card or debit card. Now, this is something that we do not facilitate with the payment. They would either have to call in one of the 1-800 numbers listed on the IRS website, or they would then also be able to go on the IRS website and go to Pay on the Pay tab and select one of the payment processors. And as you can see, a fee does apply. That is not the IRS charging the fee. That is the payment processors that are charging that fee to process those cards. Then another option is the electronic federal tax payment system. On there, this is typically not an option for that most of our tax clients use, but it's still an option where the tax client would then have to create an account to then submit their payments. The other one is the IRS Direct Pay. They would also have the option on the IRS Direct Pay. This is found on the irs.gov website. And then on the Pay tab, again, they would be able to select if they would like to have the funds come out of a bank account using their routing and account number, which is free of charge, or again, using a debit card or a credit card. And again, fees apply for the debit card or credit card. I do advise that if you're using the direct pay, that you want to retain a copy of the confirmation that that payment has been submitted. And then for individuals that cannot pay their full balance in full, they can opt to set up an installment agreement with the IRS. That means they will determine a particular date of the month and the amount that they are able to pay. And so for each month on that date, the IRS, they will have to submit their payment, or the IRS can take that payment out of their account. And again, so letting you know, a balance due, it is the payment, it is due on April the 15th. We did talk about the extensions. The extension is just additional time to file a tax return, but the balance due that a payment should be made is April the 15th. Payments made after April the 15th are subject to additional interest and penalties.